red wine. It's due in full to a thing called a flu, I believe. So you'll forgive me for that. Righto, let's dig into the markets for the week ahead and see what our traders are thinking. We're going around the world as usual today, and we're going to the UK very shortly, and we'll wind up in El Salvador, to the deepest voice in trading. And we'll also be saying hello to Orlando, who's going to talk about the US dollar. Wow, what a subject the US dollar is. I think it's about the only thing that's consistently rising at the moment, apart from the price of everything, of course. We seem to have a little bit of a rally on the commodities on Friday, or certainly the precious metals and the indices as well. Whether that's sustainable or not is another story. But let's dig into the data points first up, and say in Brighton in the UK, a very, very good morning to my good trading buddy Ash. G'day, mate.
Hi, mate. I can hear that you're getting there, which is good. Last time I spoke to you, you were feeling a bit under the weather, but it sounds like you're getting a little bit better.
Yeah, look, on the improve, and I think the red wine helps a little bit.
Of course it does.
It's a tiny bit every day, and it seems to be getting better. Mate, what are you making of, or what's the data telling us, I suppose, about the week ahead?
Really interesting, mate. There's kind of a lot to consider right now. But just as Orlando is going to do, I am also going to cover a little bit about the US dollar, because everything really is about the US dollar right now.
Mate, the higher it goes, the more I rub my hands together.
Yeah, well, I mean,
make more money when it crashes.
Well, this is the thing. Okay, so first, I want to bring up a chart of the US dollar. I rarely do this, but this is really a decent place to start. Now, this is a monthly chart of the US dollar, and if you draw in a line from around about September 2006, or maybe January 2005, and just extrapolate it left, miss this high here, go to this high here. Look where we are sitting. The 109 level is right at the top of this trend line. You can bring that down and create a channel down here as well. So, pretty nice sort of like range to kind of be looking at. And obviously, as we've kind of gone up on the US dollar, what we've really seen is it's not coming back as yet and testing these levels. Now, that's quite important, because looking for a dollar crash just because it's at 109 and it's at the top of a range, I think it's going to be way too early. So we're not really looking for a crash, but what we could be looking for is some retracement in the US dollar. We're talking about the week ahead. Is the US dollar going to ease back this week? Well, we've got to think about the probabilities of that, and we're going to use some of the data points to kind of consider what the data points might be telling us about the possibility that we get some weakness in the dollar, and then potentially pushing up the stock market, the NASDAQ, the S&P, pushing up precious metals, silver, gold, pushing up oil, possibly pushing up Bitcoin, and all those kinds of things. Now, that is not a call to say that this thing is reversing. It's just a call to say that it may well ease just a little bit. We might see some profit taking. So let's have a look at the data and see what the data is telling us about that particular theory. Now, this is the COT data. Now, if we look at the US dollar over here, what we've now got is the commercial traders here. Now look what happens. This is the red line is the shorts on the commercial traders, and the green line is the longs on the commercial traders here. So we'll have a look at these first, and then we'll have a look at price. So this is when they're heavily short, and they are diminishing the longs. They're taking long positions off the market. Now look where we are again here. Now, if we look what happens at these particular points here, then if we see here, look how short they've been, and the dollar has rallied and rallied and rallied and rallied and rallied, and that puts us in a bit of a dangerous position. Really, what we want to see is these speculators starting to ease to the downside. We want to see these guys coming out of the market on the longs, and we might just be getting a little hint of it over in the corner here. So it's only a small kind of suggestion here, but it's possible that the speculators are just starting to. So the speculators are down here, the non-commercials. The speculators are just coming out of easing out of some of those long positions and possibly building up some of the short positions as well. Now, the other thing that we can look at to kind of understand whether the picture is forming for that to be the case is again looking at another dollar instrument, another dollar trading instrument, which is the bonds. And look how the bonds are starting to build up here on the non-commercials, just starting to buy up some of these bonds. And it's a big protection play with bonds. Those bond yields haven't managed to break through substantial for a significant period of time, the 3% level. This is the 10-year. So we're starting to see the 10-year on the speculators just starting to buy up when these lows were hit. So are we about to get a rally, a very, very small rally? It's a near-term thing. We're not looking at long-term reversals, but a near-term rally in the 10-year. Possibly. Are we starting to get some easing back and some profit taking in the dollar? Possibly. This is what it's really telling us. And you know, we only ever can work on possiblies anyway. There's no certainty in trading. You know, you're very rarely going to find a point you can say anything for definite. Let's have a look at the seasonal data for the dollar. You know, so we're starting to build a picture to suggest that there could be some weakness coming. Now, this is really interesting. July, but after the first week, this is July to August. After the first week of July, this is the dollar index. The dollar index has one of its worst periods for selling right into August. So that is also suggesting that even though the dollar is strong, the fundamentals still back the dollar. But you know, even though the dollar is strong here, the seasonals are suggesting that we are in a particularly weak period. The COT data is just giving us a little hint that there could be some profit taking. And the very final thing that we need to look at here is, why would people be taking profit at this particular point? We've got data points, CPI data continues to push way beyond anybody's expectation, getting very, very close to the 10% level. There's calls for a potential move of 100 basis points, which is also is 1%. 1% is equal to 100 basis points on the interest rate. And there's other calls for 0.75, so 75 basis point move. Now, what's been priced in is the possible 1% move. So if they were to come out and say, actually, we're okay, 0.75 is fine. If the Fed are going to say that, there's another chance that there's some profit taken on the dollar and we ease the downside. But the big thing is that the next FOMC statement and the next rate is on the 27th of July. That's 10 days away. So is there going to be some uncertainty as we go into that? Are there going to be some speculators and some traders that have been buying up the dollar hard with the anticipation of the 100 basis point rise that start to go, you know what, we don't need to take the risk. We've had a great run on the dollar. We've had a great run on our trade on the dollar. Shall we take some profit off the table? And that would lead us back potentially down to a support level. So I guess that the case that I'm making is that there's a decent chance that there is some profit taking at these levels. This is a monthly chart. We're at the top of a trend line. The COT data is suggesting that those commercials have been short without any kind of respite in their particular positions. The 10-year is starting to see the speculators just come into the market and just go a little bit long. So this is kind of building a picture that we could see some easing to the downside of the dollar. Now that would potentially push up the euro as well, which you know, considering it's at parity, the euro needs some relief. So a little relief rally in some of these other markets, I think, could well be in play in the coming week, mate.
Yeah, look, I think it's a great short-term analysis, mate, on the dollar, and longer term, I've got a completely different story on the dollar in longer term, because, you know, as soon as we're hearing it now, with looking at Saudi Arabia, I won't say actually getting into bed with Russia, but there are talks along those lines. That'll bring in China into that equation, and they'll start saying, well, why are we valuing our oil in US dollars? The minute that happens, and you've got India as well saying things like, you know, why do we need to trade our goods and services, or goods in particular, in US dollars? We don't. Yeah. And, you know, as soon as that gains momentum, then it's bye-bye US dollar for mine.
Yeah, totally agree, mate. I mean, the other two key things to recognise is that there's short-term, medium, and long-term. So we are basically, what I'm basically saying is, in the short term, we might well get some.
And I agree, 100%.
Yeah, some easing down, but the medium term, I think the dollar rallies. But I agree with you in the long term. And what's really interesting here is CPI data coming out the way it is pushes the Fed towards raising interest rates. However, the other factor that we need to be recognizing here is that there is a possibility, and a pretty high one right now. I think, a lot of markets participants and economists are saying 50-50 chance of a recession. It's probably higher than that. Now, the Fed can do nothing if interest rates are at zero. So the fact that they have to raise interest rates to give them some room to maneuver when that recession comes also suggests that in the medium term, the dollar is going higher because interest rates are going higher. 3%, I would say almost definitely. 3.5, 4%, 5%, I'm not so sure, but it might have to get there. They might have to get there just so they've got some wiggle room to work with if or when that recession comes. So there are factors at play which suggest medium-term dollar's bull, dollar long, short-term dollar weak. But I agree with you. In the longer term, the dollar's in a lot of trouble.
Yeah, I'm hearing things on the grapevine like depression or hyperinflation. Which do you want?
Yeah.
Anyway, there's probably better subjects to talk about than that, or happier subjects to talk about than that. And one of them would be, I'll see you tomorrow in Trading Buddies.
Yeah, for sure, mate. For sure. We'll get down to business in the morning.
You bet we will. Thank you very much. See you then. All right, let's stay in the UK and go across. I'm not sure if we're going to London or we're going to the Isle of Wight to say hello.
We're going to London.
We're going to London, are we? Hello.
We're in London, actually. We're going away tomorrow, but still in London today.
For how long? Just a week?
Just a week.
A week on the island in the summer. Yeah, nice. Do you fish?
Do I fish? Interestingly, where we're going is good for fishing, but I don't fish personally. I never have.
Hence my question, being a non-fisherman myself, I know where all the hot spots. Anyway,
I don't think fishing is a particularly good activity for a reasonably impatient 1-year-old.
No, but for a very patient trend trader, fishing is a very good correlation because you have to wait till they get on the line, right? What's happening this week, mate?
Oh, right. Let's give this a go. All right. Well, quite a lot of things happening, really, because as a trend trader, I know you've been discussing with Ash the potential end of this bullish dollar. But while the dollar has been bullish and while it continues to be so, certainly in the near term, there have been plenty of trend trading opportunities. And I'm anticipating those continuing this week. So I'm just going to give you a little overview of where I'm at. So I'll start with gold. So gold here on the monthly time frame, I've just got a few levels drawn in. This is the monthly. So this is going back to 2011, 2012, just to show you the horizontal levels of what could have potentially been support that price has actually smashed through. Where we're at now currently is in between. This is actually a weekly level down here. I'll just move that over. This weekly level here, so these recent lows from back in 2021, that's where price is potentially headed, having now broken through minor level of support here. So that's where I'm looking for price to get to potentially this week, if the downtrend continues. And if that is to be the case, then it'll just be a matter of looking for retracements and opportunities to enter, depending on, of course, whatever strategy you are trading. As long as it's a trend trading strategy, I'm sure that there will be a time frame and an opportunity to enter that short. So in the short term, I'm heading down to around this 1675 level, which is, as I pointed out just there, those reasonably recent weekly lows down here. And past that point, well, it will just depend whether that level holds or breaks. If it holds, then perhaps a little bit more of a pause in the trading. If it breaks, then a continuation down, potentially all the way down to this this level down here. Silver is slightly different because silver is sitting at what is currently a fairly major monthly level of support. So we can see this is the monthly. You can see all of this resistance around here, resistance from all the way back in 2007, 2008 as well. And price is currently sitting right at that level. So on the daily time frame, we can see that price is just pushed down beneath there, but it's not a confirmed break of the level until we get some clarity about what's going to go on today, actually, or tomorrow, I should say. So we've closed beneath the level, but the next day is key. If price just comes up, then that's a false break. If it stays below and continues to trade below, then that might be worth, well, it certainly would be worth making a note of, because potentially the next horizontal level is all the way down here around $14. So I'm looking for that potentially to continue, but only if this level breaks. If the level holds, then perhaps we may get a bit more of a pullback. In terms of the currencies, I mean, I'm pretty bearish on all of the currencies versus the US dollar at the moment. So Aussie on the monthly, we can see we've broken through this major horizontal level of support, heading down to the next level, which you can see is from all the way back in 99, 2000. And so on the daily time frame, there's just a bit of a pullback at the moment. I'm waiting for that pullback to show that it's ended before looking for more opportunities short. And of course, on the lower time frames as well, there may be opportunities. At the moment, it's looking like more of a pullback is needed before jumping back in on those lower time frames. So it's the daily time frame I'm keeping an eye on here, ready for another move down. Kiwi dollar as well, that's the monthly time frame on the Kiwi dollar. So we can see that the recent level that price has smashed down below, and the next major level of support is a decent distance below us. And just waiting for a pullback to this horizontal level here. And if that happens, then I'll be looking for another move to the downside there. Dollar yen. I mean, really, there's not much that's been getting in the way of dollar yen of late. And, you know, the next horizontal level of resistance is a long way away. So in terms of technicals, there's absolutely no reason why I would stop trading this long. Looking for a pullback, certainly on the daily time into that. And the pullback for me, I'd like to see it come to these recent highs just here, and then look out for another opportunity to get in. But this is one that I'm still very actively looking for opportunities long on the lower time frames as well. So 4 hourly looks good at the moment. It's just retracing currently. And as soon as I see evidence of the end of that retracement, I'll be looking for a long opportunity there. The yen crosses as well. I don't have time to go into it. But the yen crosses as well, just as much as the dollar yen. I've been keeping an eye out for long opportunities and continue to do so. Euro dollar, we can see here this very strong level of support that's just been broken again, and strong monthly level of support there, and that gives quite a bit of space for further moves. So again, on this daily time frame, it looks like we're due a retracement, and it looks like that retracement has begun. I'm waiting for more of a pullback up here, and then I'll be looking for a short opportunity. And again, the next level of support is quite a decent distance away. So some potentially high reward to risk opportunities. I'll show you where that level of support is from over here on the monthly time frame from way back in 2000. So potentially for a pullback there, and then further opportunities to the downside. Again, on this one, I think on the 4 hourly time frame, this looks like a bit too deep of a retracement now to continue getting in on those lower time frames. So it's the daily retracement that I'm looking for there before continuing to trade short. And finally, the last one I'm going to look at for today is pound, just to show you that that has also broken down through this major monthly level of support here. There's not much technically in the way of this now heading further downwards, apart from this previous low from over here. So I could be a little bit more conservative with where I put that. But really, again, similar to the euro, we've just broken through this horizontal level of support and a pullback. I'd love to see a retest of that level on the daily time frame and a short entry there, but otherwise it's going to be potentially lower time frames on this one. This one still is trending to the downside on the 4 hourly, so I'll be looking out for a potential short opportunity in the coming days on the 4 hourly time frame and potentially lower time frames. But if it does retrace a bit further, fantastic. I'll wait for it to get to this horizontal level here before trading short. So it's all still strength for me at the moment, just until I see technical evidence that is potentially coming to an end, which at the moment on these particular charts I don't see just yet.
Yeah, look, I think it's pretty. Sorry, Chloe. I think it's pretty clear that over the last, goodness knows how long, weeks, seems months now, that the US dollar, and I know we're US dollar centric today, but it seems to be the flavour of the month / 2 months / 3 months. It seems to be the most reliable conveyance on the charts that I've seen in the last or that period of time, and you certainly seem to be nailing it, whether it's against gold or other currencies. And I know your famous quote is, your trends will go longer than you think they will. That will turn around one day, but it's not just yet, in your opinion, right?
It will turn around one day, and that's the day that I'll take a few losing trades, but happens along the way is the most important thing for me.
Yeah, they'll be small in relation to what you've accumulated in the meantime, I would imagine. All right, mate. Bali coming up in maybe late November, if all things go well. You'll be a participant.
Mate, if you're there, I'll be there.
No pressure. All right. Lovely to see you, and we'll catch up soon.
Yeah, catch you soon, Geoff. See you.
All right, let's flip across the world a little bit and go to Salvador now, and of course say hello to, or a very warm welcome once again to the deepest voice in trading. Hola, mi amigo.
Hello traders, Orlando here. Why don't we have a look at the US dollar, the DXY, US dollar currency index for last week. I'm still very much a bull for on this market, on the US dollar. As you can see, we have been talking about this flag breakout for a while, and the US dollar just keeps on pushing higher. Why don't we have a look at the higher time frames, because this is where we're going to have, or where we're going to find key levels where we can trade from. Right, so we have to go to the, I don't know, 4-day chart. Let's have a look. Actually, let's go to the weekly chart. Actually, let's go to the 2-week chart. Right, so the 2-week chart shows, right, this key level right here, the bottom on December 18th, 2000, and the highs on September 2002 being retested at the moment, right? This is where, we saw some profit taking, I'm sorry. I wouldn't say sellers, right? But definitely saw some selling pressure at this level, the 109.15 to 109.20 on the DXY. So we keep on looking for buys on the US dollar, right? This is the key level that we are looking for first targets on a deep buy. So let's go back to the 2-week chart just to find some levels where we can trade from on a dip, right? The level that I'm interested in is this key level right here. Let me just thicken this chart out for you, because this is what I'm looking at, right? As you can see here, this is the level where we saw buyers come in, right, to push price or to appreciate the US dollar for about 14%, right? So a dip, right, a 2000 to 2002 pivot. That's what I call it, and that's what I have been calling it for a while. Let's go back to the daily chart, right? And yeah, it seems like this is the level where I will look for heavy buys, right? More so because this is um, June highs, right? The level that was broken with this massive daily candle. So we're looking at about from current prices or Friday's close about a 1.77% move to the downside. Now, I don't know if this is going to happen, but let's have a look at the 4-hour chart. Right, the 4-hour chart, I'm going to delete all of these Fibonacci's and this level right here. Yeah, so on the 4-hour chart, this is what I'm looking at. This is the same level that I was talking about earlier, June highs. And on the 4-hour chart, seems like an extreme pullback, right? More so because it would completely and utterly break with the current structure of the market, right? But I really don't see. I really don't see another level that I would be comfortable deep buying with size, right? Now, having said that, let's go to the hourly chart because I want to show you guys something. Now, on the on the hourly chart, this level right here is a level that I would feel comfortable with buying US dollars, right? Now, let me tell you why um, I would be comfortable doing this, right? Just because if you notice, sorry, if you notice, right, this range right here just shows an area of demand, right? So this is the first key level or the first magnet level that I will be looking for. Yeah, I know that it will break with this low, but it really doesn't matter because if you notice here, for the past 1, 2, 3, 4, let's call it 5 sessions, price has been all over the place in the sense that the structure in this market on the past 5 sessions hasn't been trending, right? The green lines, dotted lines on my charts, are the previous day's highs and lows. So if you notice, we don't have continuing higher daily highs and higher daily lows. And So having said that, if price breaks with this low, really it doesn't matter because there's no structure. The real structure in this market should be this low, this low, this low, right? Continuing with the bullish stance. So right, I'm sorry, this video is going a little bit longer than expected, but hear me out. First scenario would be a dip towards the 107 level on the DXY. I would be looking for longs on a dip here, right? On the markets that I trade the US dollar on. I haven't looked at, the markets that I trade the US dollar on, but, looking at US dollar Mexican peso, I see nothing. The USD, the USD is quite difficult to short on a US dollar long because we are trading around parity, right? But a very strong move on the USD, I believe, would bring, um, a sell-off here below parity. So yeah, let's move on and let's continue with the DXY. So the second scenario here would be a continuation higher on the DXY. So I don't have a trade idea for a continuation higher, just because we have this fake out right on the hourly. There's actually no level for me to trade off of a breakout, but the level that I just pointed out, the 108.55 to 108.60 would be a level that I would feel comfortable buying a breakout. Now, what I would want to see is the DXY in this case, right? Breaking above the Friday's highs, coming back towards the 108.50, and then holding that level, which would bring a nice risk to reward ratio opportunity. So those are my two scenarios. Of course, I am not looking for sales on the USD. And I'll keep you guys posted. Have a great trading week and be safe.
And you be safe too, my good friend, mi amigo. Take it into the week with a wonderful exuberance as you always do. And that pretty much wraps us up, guys, for this edition of Sunday Market Update. We hope you've gleaned something from our traders and what they're looking for the coming week. My advice would be do as you normally do. Treat the market as it's respect as it needs to be respected, and choose your trades wisely. Have a great week ahead. We look forward to your company throughout the week. We will be, of course, Ash and I kick it off tomorrow with Trading Buddies. If you can be with us at around about 2:55 Singapore time, then we'd love to have your company and you can become one of our Trading Buddies. Have a great week.